What's up, investors? Welcome to another episode of the WTF Report, bringing you the latest and greatest news that directly impact our financial markets and, more importantly, our portfolios. So this week we got a potential new stimulus package that's in the works. We got some new comments from Jerome Powell and some new actions from the Fed. And for some reason, I'm going to be talking about Kim Kardashian. So without further ado, my name is Ayan, and this is AQ Markets. Welcome to the next episode of the WTF Report. So this week we had overall a pretty decent week. The Dow Jones was up 4%, the S&P 500 was up 4.4%, and this was led by two major things that happened on Tuesday. One of those things is that President Trump was proposing his infrastructure bill that equates to around $1 trillion in the form of a stimulus package. And this is actually something that he's always been interested in doing. Even during his campaign run, he did mention that we do need a whole new revamp of infrastructure, though. So this is him fulfilling that campaign promise, which is pretty good. Additionally, we had some new remarks from Jerome Powell, and we had some additional Fed actions that are going to be enacted going forward. So first, let's talk about the stimulus package. This stimulus package is 100% allocated towards infrastructure. It totals $1 trillion, and the main goals of it is to allocate this money towards reconstructing roads and bridges, and then also developing 5G technology for the country, along with expanding current broadband connections in rural parts of the United States. So it is $1 trillion. It hasn't really been, paid for or budgeted yet, so we're not sure where this money is coming from, and it hasn't been passed or anything like that. This is just a proposal, and ultimately it needs to get passed in the House and Senate and then signed by President Trump in order for it to go into action. But markets obviously reacted to that, given that a lot of stimulus over the last 3-4 months has been pretty easy to get through these days. So let's talk about who can really benefit from this from an investment point of view when it comes to this stimulus package. As I mentioned, the package is composed of allocating funds towards roads, bridges, and other pieces of infrastructure, along with the 5G technology and broadband expansion. So honing in on that first half, if all of these construction projects do take place, the whole construction industry, the industrials industry that provide these materials for the means of constructing, they're going to win pretty huge. So if you look at companies like Lowe's or Home Depot or other private contractors that are publicly listed, these would be really interesting to see who is going to win these contracts and who's going to be supplying the materials as well. Along with that, with 5G expansion and with rural areas being given broadband connections, the telecommunications industry is also probably going to benefit pretty well from this. I think the biggest winner going into this is going to be the company that's going to be leading 5G technology, i.e. doing the research behind it, building the updated cell towers, and doing all the software and hardware behind this 5G technology. As it stands right now, it really isn't certain who's going to be behind this, but it would be very wise to keep updated on all of these major telecommunication companies to see what does develop once all of this gets passed. Remember, it hasn't been passed yet, it's just been proposed. So if that does go through, you might see a big jump in a lot of these construction companies and a lot of these telecommunication companies on the premise that they're going to be involved. But at the end of the day, the long-term winner is going to be the companies that do get involved. Another piece of information that came out was some really positive numbers in regards to the retail sales number. Now, these retail sales number are basically all the sales in retail excluding cars, one thing to keep in note. And what we saw was that there was actually a 17.7% rise in retail sales from April to May when they were expecting an 8% rise. So this gave people and investors more of an insight that, okay, people are still spending money, they have money on hand to buy frivolous things, and along with that, maybe this unemployment number isn't really affecting the numbers as hard as they thought. But it's very important to keep in mind that from March to April, the sales were down 14.7%. So it's not like the number really skyrocketed. It kind of just recovered better and quicker than people were expecting. And that's very important to keep in mind. Jerome Powell went on a series of webinars discussing to the public, into Congress, into the Senate, some of the new updates to the Federal Reserve's policies. And what they have decided to do is to extend their purchasing into individual corporate bonds, which is very important to note because prior to that, they were buying into ETFs that were bond-based in order to add some more liquidity to them. But now, considering that they're going to be buying individual pieces of debt, give a lot of companies a lot more hope that they're going to be able to raise the money through the sale of bonds. And if there isn't any buyers, the Fed might step in and buy their bonds. So this propped up the market also a little bit. It's almost kind of clear that Jerome Powell is getting a little bit sick of being in charge of propping the market up with the Federal Reserve. And he did issue this statement saying that a full recovery is only possible when health confidence is back to normal. And that's very important to note here because investors keep buying off of the premise that everything is going to return to normal soon. But Jerome Powell keeps reiterating this fact that nothing is 100% until health is 100%. So when you're investing, keep in mind that your whole expectation of the future should be completely predicated on the fact that we either have a proper cure, vaccine for coronavirus, or if it just completely goes away in its entirety. And it's very important to note that just because the markets are up and just because society is open again, that does not mean it's safe. Look at this. This is the coronavirus numbers in the United States, which is north of 2 million cases. So please wear a face mask and wash your hands. Onwards to some industry and stock specific news. There's a cool new ETF that made its debut about 2 weeks ago, and it's gained a lot more traction since adding to its portfolio. And that is a new iGaming / sports betting ETF called BETZ, BETZ. And this is cool because they have exposure to casinos, online betting related to sports, and along with that, there's also some cool tech companies that are found in there. So if you want to get some exposure to a lot of the big casinos and sports betting, but don't want to go ahead and stock pick, this would be a really interesting investment for you to pursue. Carnival Cruise Lines had a pretty bad week, and they got hit with some poor earnings reports, but then they also got the double whammy with some additional news. So starting off with their earnings report, they posted a quarterly loss of $4.4 billion with a B dollars, and Wall Street was kind of expecting them to do not as bad. They were still expecting them to post a loss. So as you can see by their chart, they were kind of propped up early on in the week, and then when they reported that, they kind of went down a little bit. But then they got hit with a double whammy because the new CDC guidelines basically said that they aren't allowed to go in sail again until September. So they had to extend their restarting dates that applied to all cruise lines, but Carnival got hit the worst this week just because they also reported their earnings. So, they're still up from 2-3 weeks ago, which is good, but they are not close to a full recovery yet. In their earnings announcements, they also mentioned that they're going to be selling 6 giant cruise lines or cruise ships. I don't really know who's going to buy them, but that should add a little bit more liquidity to their balance sheet. That'll allow them to stay afloat even longer, pun intended. So now I'm going to talk about something I never thought I'd ever talk about on this channel, let alone in life in general, and that's Kim Kardashian. And this has everything to do with Spotify and nothing to do with makeup or Kanye West. So basically, I remember a few weeks ago I discussed how Joe Rogan signed a deal with Spotify to be the exclusive carrier of his podcast. And then I also mentioned that Spotify is most likely going to look into encapsulating the podcast space and really be the leading figure in that. Well, they're really flexing their muscles again by signing Kim Kardashian and DC Comics to be exclusive carriers of podcasts based around DC Comics and Kim Kardashian. So they also signed a pretty good deal. The numbers on the deal haven't come out yet, but Wall Street reacted pretty positive to that. So Spotify hit all-time highs. They're up over 20% in 1 week. So I guess the new podcast king is just going to be Spotify. Thus concludes this week's episode of the WTF Report. I hope it brought a lot more insight on this new potential stimulus package and who could be the big winners of it. And I hope it also explained how Kim Kardashian can somehow fit into the financial markets. Anyway, don't forget to tell your friends and your mom and your grandma and everyone in your family to like, comment, and subscribe. I'll see you guys next week. Thank you.